President Biden released an executive order on cryptocurrency, laying out a new potential regulatory agenda. But the order also talked a lot about the development of a central bank digital currency. I know a lot of you are thinking, wait, what's that? Well, I'm so glad you asked. I've been following this topic for a while. And if you're thinking it's the same thing as Bitcoin, we've got a lot of catching up to do. I'm going to tell you what digital currencies are, and in particular, central bank digital currencies, how those differ from cryptocurrencies, and why the US is just now getting around to talking about releasing one when countries like China have already made it a reality. Let's get into it. Now, you've probably heard of cryptocurrency, but it isn't the only form of digital currency. And in fact, some people argue that crypto isn't currency at all. A digital currency is any money that exists digitally, rather than in paper or coin form. The same way you can pay for things by pulling bills out of your wallet, you can pay for them with digital currency from your digital wallet. What central bank currencies are not is Bitcoin or any other kind of cryptocurrency. Think about it like this. All sandals are shoes, but not all shoes are sandals, right? Cryptocurrencies are digital assets made by people that have a value. And central bank digital currency, or CBDC, is a digital asset backed by the country's government and produced by its central bank. Since the tokens are produced by the central bank, which is responsible for printing money, they're the same as cash. Central bank digital currencies don't fluctuate in value. You don't trade them. They're like the dollars in your bank account or on your credit card balance, except they're not held at a bank. They're on a digital ledger and don't require an internet connection to access. So why haven't we seen the Federal Reserve rolling out a digital dollar? Oh, that's a bit of a long story. The biggest problem is that lawmakers and regulators aren't in agreement that the US really needs a digital dollar. Opponents say that the private sector in the US is better equipped to deliver digital currencies than the government or the Fed. George Selgin, a senior fellow at the Cato Institute, who helmed the Center for Monetary and Financial Alternatives, told me recently that he doesn't think a central bank digital currency would even be particularly useful. Instead, the Fed should get out of the way and let the fintech industry do its thing. Critics of a digital dollar point to credit cards and apps like PayPal, Venmo, or Zelle as proof that the private sector is on the right track. But legislators like Senator Elizabeth Warren disagree. They're not very enthusiastic about what they've seen from fintech. Companies have already created what they call stablecoins, cryptocurrencies that are tied to the value of the dollar and don't move in price. Warren has called private stablecoins a risk to consumers and the economy. And Senate Banking Committee Chairman Sherrod Brown has pressed the companies behind the most popular stablecoins about a lack of transparency and consumer protection. The Fed recently released a paper on central bank digital currency, but didn't really take a side in the argument. I spoke with Fed Governor Lael Brainerd last year, and she said the technology piece is largely there, but the Fed needs buy-in from Congress and other regulators. Others on the Fed are worried a central bank digital currency could hurt banks or damage the financial system. So where does that leave us? Well, President Biden announced that he's pushing forward with research, and the Treasury Department will compile a report on the future of money and payment systems. He's also pushing forward with more review on a central bank digital currency. But still, the US is well behind in the development of a central bank digital currency. In China, citizens have been using its digital currency, the e-renminbi, for more than a year. And during the Winter Olympics, they even rolled it out to tourists. Biden's announcement this week suggests that the US is going to be putting a lot more thought into digital currencies before we take action. China is already a leader in this space, and people like Brainerd are worried that with first mover advantage, they could force the US to play catch up. Global financial leaders, like the head of the International Monetary Fund and the Bank for International Settlements, have called central bank digital currency the future of money. It remains to be seen if the US will get left behind in that future. If you enjoyed this video, make sure to hit the like button. And if you're interested in markets, make sure you subscribe. As Champagne Papi, aka Drake, tells us, guess you win some and lose some, as long as the outcome is income. That's all for now. See you next time.